Hey, welcome to the Closing Beat, everybody. Happy Friday. How you doing out there? Hope you're having a good day and you're excited to learn some new stuff today. We're going to share all kinds of good stuff with you. This is called the Closing Beats, our stock market update show that we do every day to cover the stock market in unique ways. Rather than have biases or opinions and things, we like to share the data with you, what we can anyways. And so I hope you enjoy. If you do enjoy and you're working with a financial advisor and you're like, hey man, why doesn't that person help me out? Man, they call me once a month or a year or something and they're like, hey, how's the family? I hope you'll check us out at Jazz Wealth. We're trying to do things a little differently. Super big thank you to everyone who has given us a chance, whether it's on the website, transferring accounts or rolling over accounts, or if you're just a research member. That really means a lot to us. I know it seems like $13 a month, like what are we doing? But it really helps us out and helps us continue to bring some of this cool stuff to you. So I appreciate the support in any way. If you're just watching and you enjoy it, I'm just happy you're here. So I'll get started. Try to teach you some stuff today. Remember yesterday? This week I've been leaving comments the day before so that we could go back and say, hey man, turns out we were onto something with what we had there. So yesterday's comments were, what happens in the market going forward is just chop, right? So when we come into today, because of what happened on Wednesday and Thursday, that up and then back down, Friday leaves you open to just chop. And that's exactly what you got today if you were taking a look at the markets throughout the day. We'll do it in a couple unique ways here. I'll come over to the charts. Here's the S&P 500. Using the futures here to take a look, you could see by looking at the daily candlestick there, it was just a choppy day. It was back and forth. You knew from watching yesterday, you didn't really have to expect a rocket ship today. If we look at a 5-minute chart and just kind of zoom in on today, here's the chop, right? Ultimately finishing flat for the S&P. Basically right where we're at there, but we had a great start. Oh, yay, it's going to be a good day. Then it gave it all away, went negative, went positive again, went negative again, went positive again, and basically stayed right around the flat line. That is known as chop. And now you've learned, if you watched this week, you know why that happened, right? On Wednesday, we gave you that hint that didn't it seem like that wasn't supposed to go high? That was kind of odd. And then we reversed the next day after that. Today, the chop. This week basically playing out almost as expected. Overall, I'll cover some stuff with you here. Let's go to the Dow first. Choppy day for the Dow as well, up 0.33% on the day. It was the leader today, even with, you've got to look at some of these now a little differently than we used to in the Dow. Salesforce being one of the bigger drags on the Dow today. So even with that and United Healthcare, I kind of like this pullback in United Healthcare. But even with that, the markets, the Dow was still able to move higher. You got Caterpillar moving higher there, 2.6%. That was one of your biggest contributors to the Dow. And Home Depot was up 1.3%. Decent day. Home Depot's hanging in there with some of the other stocks. So that was pretty cool there. We go on to the S&P there. It was a below average day. Why would I say that? A below average day, below average volume day. Kind of interesting how this works. Let me just have a little fun with you here for a second. I'm going to pull up something that's going to look scary. It's going to just be real scary here in the beginning. Don't let it scare you. What this is the average performance of the market every single day for the last 20 years. So over the last 20 years, pick a day and just see what the average performance is. Well, today's September 11th, and we obviously have different things to focus on today. If you were around and you lived through that, it's obviously a story to remember. But market-wise, it tends to be a quite positive day, almost a 0.5% gain, 0.43%. It ranks as the 11th. September 11th ranks as the third best day of the month. There are two other days that tend to outperform September 11th, but it's known as being a pretty good day. In fact, if you look over the next 5 days, the next 5 days rank in the 71st percentile in terms of performance, meaning it's up there. It's not the best, right? It's not the worst, but it's well above average. And so we have this thing going on here. Average gain today should have been 0.43% or something close to it. We didn't get that, right? If you go back over here to the charts, you can see the S&P on the screen. You were flat, right? It was basically 0.05%. Not too exciting. So we pop back over here, we can see, all right, it was a below average day. That lets you know that there's more weakness still in there. I'm not the only one that knows these numbers. You know that the big algorithms and everything know these numbers. So a below average day goes into next week. We've got sort of seasonal support, as you can see by all these days here. Typically, it's at least a little positive, but now we're going into it with a hint of negativity. So that's a little bit frustrating if you were looking for next week to be a strong one. Could be a bit of a coin flip, even though historically we tend to be positive as we go into the end of the first half of the year. I'm going to cover this a little bit more detailed here in just a minute, but I wanted to share that with you. So something to take a look at. We can go back to it if you like. It's also in the research section for our members there, if you happen to like that sort of thing. We touch on it every now and then. Let's go over to the Nasdaq here real quick while we do the indices there. A lot of good stuff happening in the Nasdaq, but unfortunately, because you have Apple, Amazon, and Microsoft that make up 35% of the Nasdaq, Well, if those guys have a bad day, you're likely going to see the Nasdaq have a bad day. But there's really a lot of good stuff inside of this. Here's Apple for the day. It pulled back, but ultimately it's a good pullback. There's nothing wrong with the stocks, just nice little profit taking. Microsoft down. This one looks a little bit worse here because you're breaking through the short midterm trend lines there. Amazon also not so great. I think Apple kind of leads as one of the bigger ones there. But if you look at the Nasdaq, you think, oh, maybe I should stay away. If you look inside the Nasdaq there, you got healthcare, biotech. They did well today. These aren't great stocks, but they had good days. Gilead Sciences coming off the lows there. That was very close to making new lows, and it managed to bounce. Moderna, a little bounce today, 3%. Can't argue with that. That's a good day overall. If you go over to some of the tech names, they weren't all down. Look at Cognizant. Looking at trying to break out here. You got a sideways base. We covered this in our class last night for customers. You got a sideways base. It's hinting at a breakout. But if you look at the Nasdaq, you go, oh, it was a crappy day. Oh, well, what are we going to do? So really kind of interesting how the major indices aren't telling the full story right now, and it's because a couple stocks are just in profit-taking mode. Not negative, not being biased or anything, just that's the way they are. If you have been watching our YouTube channel this week, bottom right-hand corner of your screen, we've got some FinTips videos, large cap funds ranked by performance. If you're looking in your 401k, how to see if you have the good ones inside of that one. And then we talked about yesterday, will the stock market actually end higher in September? We got some really cool stuff there. Yesterday, and last night for our class for customers, we did our final kind of look at trading plans, right? I've been harping on that this week. We looked at that in detail, and actually, Charlie's still here. So if you're a research member, Charlie, if I can get you to do it, we're going to make that class for research members public. And I'm only doing it because our compliance lady, so sorry, Renee, our compliance lady is gone until Tuesday. So if the video disappears and you're a research member, it had to go away, right? I'm not supposed to share all these classes with you. This is not a sales pitch or anything, but we're going to make it public. Charlie is going to, we're going to make it public. And for our research members, and go take a look. But if you're sitting around this weekend and you're a research member, you might want to watch it and then get it out of the way because we have the other trading plan videos, but this one might have to come down because we did some more specific type stuff we're not probably allowed to do. So if it comes down, I'm sorry, it has to come down. But we're going to give it a shot while compliance is on vacation, and if I get in trouble, we'll never do it again. I promise. I'm sorry. Anyways, research site also has some great posts, and Cody back there actually had a great research post this week, adding a lot of really cool data for some of the September sector stats. I'll cover a little bit of that here today for you. With these sectors in mind, let's go over to the sector breakdown here for the day. Not a whole lot. You had all but two sectors down more than 1% this week. Not a good week for those. Materials and industrials did good. Let's go to industrials first. That was the best performing sector today. You had action in the aerospace, defense, and machinery sector. This sector, by the way, is yielding 2.2% so far, and many look at this as like, this is kind of boring. We know Apple, we know Microsoft, we know Nikola. Wow, these are exciting stocks. But look, there's a lot of good stuff going on in this sector. You got to do a little extra homework. Lockheed Martin, great reversal there. It's not given up yet. It's trying to fight its way out of this trend here. Maybe a little bit of a breakout. We'll see what happens. Honeywell continues to be strong overall. It's up 15% this quarter. Honeywell, not an exciting stock, but look, it's doing well, right? You can't complain with some of this stuff if you're participating there. Caterpillar's made new highs, almost making new highs today, but made new highs the other day in the Dow. Positive year to date. It's actually outperforming the Dow and outperforming its own sector there. So kind of interesting there if you're paying attention to what's going on in what's known as like a boring sector. Materials was the second best performer today. It's the only sector to be positive on the week. Sector yield on this one, by the way, is over 2% still as well. Leaders in the chemical stocks. Most people, again, looking at Tesla, Apple, Microsoft, and all those, you've got chemical stocks sticking out here. Here's a couple for you to take a look at. You got Lindell. I don't know how to say the name. I always say Lindell. You got a breakout here right around the 200-day moving average. Looking good, starting to wake up again. Maybe something that, I don't know if it does, but just something that at least is something else to look at besides Apple. You got Lind has been a good leader there. It's just kind of like a little beast here in the short term, doing well. Chemical stock Dow, moving higher, slowly moving higher there. It's up over 100% in the last 6 months. That beats Apple, that beats Microsoft. And so, although it's not exciting, got to look at some of these names, do a little more research. Tech's another sector, was lower on the day. It was the weakest sector of the day, by the way. This week, it lost 5%. It was the worst performing sector for the week. Really, it was the most overbought stocks that were the worst performers. I'm talking your Apple, Microsoft, PayPal, NVIDIA. They're not bad stocks. They're just pulling back. That's all it was. So if you're going over and you're looking through the sectors there, you're going to notice tech was a bit weak this whole week and today as well. Communication services, second weakest on the day and also the second weakest on the week. Same concept here. If we take a look, you got Facebook pulling back. It's not a bad stock. Nothing wrong there. Just pulling back. Google pulling back, or Alphabet, if you want to say that. Those two names led to the downside overall. I'll go to gold here real quick because you can see the other sectors on your list. We got gold pulling back just a little bit. It's quiet. I don't think you learned anything new by what happened with gold today. Up basically almost 1% for the week, 0.75% for the week. So not really anything to learn from the action this week. Same with oil. You got that sell-off there, but it didn't bounce. Oil's a very trending type commodity, meaning when it starts a new downtrend, you don't want to be the first to try to pick on this. I like some of the oversold stocks in this category. I think you got more weakness ahead for the price of oil based on how it trends. When it reverses course, you do not want to be on the wrong side of that train. Let it play itself out. Study it this weekend. Look at how oil trends and trends in a direction. Very difficult to be on the wrong side of oil there. Let's go to the new highs, new lows for the week here and see what we've got. You got 5 new highs on the day. It looks like 1 new low. Oh, I bet you I can guess which one it is. Let's do new highs first. Sherwin-Williams, this is a notable one. Very strong, looking good there. FedEx, good strong move here. It's been really strong lately. FedEx has earnings next week, so you may want to be careful there if you own it. We happen to own it, so we'll be a little cautious on that one. It's been a really, really nice performer lately. Nike also looking good. New 52-week highs today. Can't complain there. Freeport-McMoRan, that's maybe one other one. Steady, uptrending stock. It's just hard to argue with what's going on there. And I'm going to bet, I saw it. I looked at the bottom of the list there. Walgreens, that's going to be all week, every single day this week, Walgreens hit new 52-week lows. Not a good sign if you own it. If you like the idea of buying a discount, it's hard, it's tough to guess the bottom on this one, but you got to feel like somewhere in this low 34 area is at least a spot where it takes a break, especially given what happened today. If I could zoom in. You see how today it made new 52-week lows and the volume came in? All of a sudden people said, that's enough. I'll take a shot. I want to buy this thing. So maybe a little bit of action there after getting booted out of the Dow. Maybe it's trying to wake up. I don't know. I can't really, say things like that. Anyways, let's take a look at our watch list this week. What we're going to do is highlight, or for today, we're going to take a look at which sectors are the worst performing in the second half of September. If you don't know, let's go over and take a look here. We did a class on this one. Where do I got to go? I got to go here. I got to go here. Here is it's a composite chart, right? What we did is I've shared this a couple times. We said, okay, let's look at all the month of September. So from the beginning to the very end of September, let's see what's going on here. But let's take the average performance by day. Another way to look at this is basically just saying, hey, I took this thing over here. I plotted the average performance. I just plotted this. Don't make it, I'm not magic. I just plotted each one of these to see what does September typically look like. And what we learned from that in our FinTips video earlier this week, and last week as well, was that September tends to start okay, a little messy, but it tends to give you that strength. This right here is those 5 days that we just took a look at a minute ago, right there. That's that middle of the month boost where you get just a little bit before we start, fading away, right? So what we're doing is just plotting all those numbers in a really easy way to take a look at. Now, if we know that September typically is weaker in the second half of the month, let's pretend it happens this month, or let's just pretend the same thing happens. We get into late next week, it starts to sell off, or we get a bounce early in the week, and then we start to sell off. Let's just pretend it happens. Which sectors are you at most risk for maybe getting in a little bit of trouble for? So what we did is we took just the performance of the sectors from the middle of the month to the end of the month to take a look and see, does anything stand out? Here you go. You got utilities as the best performing area. Thankfully, tech gets a little bit of a bounce. That'd be good for tech because it's pulled back a little bit. I don't think anybody would complain about that. Those are the only two that average a performance almost over the last 20 years, only in the second half of September. While everything is slowly pulling back, those sectors do well. Utilities seen as defensive, so you can kind of understand that. Worst performing sector is healthcare, and that one's been a little bit weak lately. So if we get a bounce early next week and it starts to drift away, that may be a first sign that things are starting to roll away. The materials sector, which is the second worst performer, also has the lowest number of years when it's been positive in the second half of September. Only 6 of the last 19 years there. It's also the most volatile right there. So when it's down big. When it's up, it's not up big, right? So on those years, those 6 of 19 years, they're not great years. Positive, but not great. The other years, the remaining years, 13 years, are down and down big, so that ranks as the most volatile. If you have some material stocks in there, you see volatility, that's something to consider there. All right, if you look, this is a median performance here. If you look at the average performance, which I didn't plot for you, every single sector averages a decline from the middle of the month to the end of the month. Let's hope this time's different, right? But if you're looking for the markets to pull back and you wanted some kind of stat to kind of prove that, here's a quick way to take a look at it. And all I did on the watch list, if you were over here, all I did was basically just put them in order, right? So, or not in order, but just put them on the list so you could see, have an idea of what to look at. If you're using the ETFs, you just follow the ETF that you like for those, and there you have it. So that is our watch list to wrap up the week. Kind of an interesting way of doing things. Hope you enjoyed. Okay, what's next? Hey, stocks in the news. Let's do that. All right, let's go over here. Stocks in the news for the day. Chewy. There you go. Chewy beat on earnings by 8 cents. They still lost money. They raised their guidance going forward. Didn't matter. They still lost money. They're losing money. It's not a profitable company there. Stock was down 10% all the way back to the 50-day moving average. Dave & Buster's, you know they've had a hard time here. That's the virus really does. Talk about a virus-sensitive stock. Dave & Buster's lower on the day. They lost less than expected. Revenues overall were weak, kind of expected. The stock still sold off 8% on the day. That's what you have. Chipotle says that their online ordering is expected to double to $2.4 billion. Online ordering from Chipotle. They got to figure it out, right? Stock basically a little bit lower on the day. It's been pretty extended here. It's had a great move. For it to move sideways, I think is no problem. And I think that's good news for Chipotle overall, the fact that they're able to grab that kind of attention. Peloton down 4% on the day. Old Peloton says, we beat on earnings by 15 cents. We raised our guidance. We have revenues that are stronger than expected. And Wall Street said, it's a bike, right? That's linked to the internet. And people talk to you. And then you work harder and you lose a lot of weight. It didn't get sold today. There was a lot of negative bias towards this stock. I'm not going to go there, but a lot of analysts were saying, yeah, that's great, but you're already up so much, you're already worth so much that you can't justify the earnings that you have. You've got to do better. And so Wall Street gave them a bit of a punishment today, we'll say. Oracle, very volatile day for Oracle. If you take a look, this stock doesn't normally really do a whole lot overall. Beat on earnings by 7 cents. They raised their guidance. Revenues better than expected. Lots of excitement to start the day. And then it faded away throughout the day. Back into this little range here. It's still trending higher. It's still a nice, strong, consistent stock. Very low volatility, typically. So Oracle, not bad. They did good on earnings there. Just got a little ahead of itself, and so that's what you see there. Next week, we mentioned already, you've got FedEx reporting earnings. That'll be a volatile stock when that comes out for sure. FedEx always is volatile. You got home builder Lennar. You got Lennar up 2.6% overall on the day. They're going to report earnings as well. And Adobe will have earnings. That will be a volatile tech stock for earnings. Lastly, and if you have questions, feel free to post the questions there. We'll try to pull them up and take some comments from you or questions. New York Stock Exchange doesn't like the new trader tax that they're trying to put in New Jersey. They said, you know what? We will move to Chicago if we have to. And New Jersey was like, come on, you're not going anywhere, right? You're not going to do this. The New York Stock Exchange said, tell you what, at the end of this month, we're going to move one of our exchanges digitally to Chicago just to show you that we can leave if you decide to tax us the 0.00025 cents a share. They ain't messing around. Can you blame them, right? If you're treated better in another state and you're going to pay less, you got to do it, right? I don't know. I'm going to go there. Okay, a couple other things. We'll take your comments. I'm going to load up the comment screen, see what you can do while I say the following. Weibo is going to be reporting earnings. We talked about Lennar reporting earnings as well. You got Public Storage paying out $2 next week. Crown Castle, $1.20. Digital Realty, $1.12. So you've got a handful of names that are going to be paying out their dividends in the REIT space. T. Rowe Price paying out 90 cents. Altria, we talked about that last night in the class, 86 cents. Domino's Pizza, 78 cents. And Gilead, 68 cents coming out next week, ex-dividend day is today, so I don't know when the dividends come out, but we'll point that out. No go on the comments? He's got it. Look at him go. Okay, a couple questions here. Jay says, is tech oversold? Do you expect more selling in September and October, but we'd like to scoop up a little on the way down? Same comments on names like Apple or tech in general. If we were to look at tech, you can't say it's oversold in the midterm here. Charts, there we go. You can't say it's oversold in the midterm. Short term, just over the last couple weeks, yeah, oversold, maybe due to chop around, bounce a little bit here. But I don't think that this is the the ultimate bottom on this. I think you have people try to scoop this up unless there's a wave of good news and everything starts looking good. I don't know about that. So I would scoop in. No? Oh, we got one in there. We got one in there. I'll do it the old-fashioned way. Verizon bouncing off the 20-day. Verizon's been interestingly strong there. Yeah, little breakout overall, and then you got this pullback this week. This may be starting to move back into a range. That was a lot of excitement for Verizon, not normal. It tends to get a lot of excitement and then kind of take a break. So if it doesn't do a whole lot for a little bit, I wouldn't be too stressed out about it with Verizon there. And let me go like this, see what I can do, help you out there. Apple event kind of launched late there. They kind of announced it late there. Apple events are typically buy on the rumor, sell on the news. So the average, we did this a while back. Average performance on an Apple event day is actually always negative. Very tough one to participate in there. You like purple? Purple's really stepped up their advertising, by the way. Had a great week overall. Obviously, much better performance than anything else that's out there. Look at purple. Lots of volume, lots of excitement there. They are issuing an oh, they already did. They priced all those shares. There you go. Look, they gobbled them up. How many shares traded on that day? Almost all of them. So what we believe to be, or my personal belief, is that the two original founders sold off their 11 million shares or something like that. That's been priced. They priced it at $18.50. Obviously, they did a little bit better than that. They're probably long gone now with their shares. So that's going to be the excitement wrapped around that. Yep. How does the expense ratio on fund holdings work when you buy and sell throughout the year? Is the expense ratio prorated? If it's an ETF, then the expenses come out on a daily basis. So it doesn't matter if you buy and sell, you buy and sell. You're paying the expense inside of the fund itself. So it's not, you don't like write a check or something. You know what I mean? I saw that Nikola falling apart today. There's a lot of drama waking up there. Hope you like volatility. Nikola down another 15% today. There was another short seller, Citron maybe, that agreed with the original Broadridge or whoever it was that said this company is a fraud. And so Nikola's CEO called the SEC and said, hey, we don't like what they're doing. We want you to investigate this. The other side says, we want you to investigate them because it's a fraud. You have a recipe for a volatile stock, so just heads up there. If you're playing along, you see it wiggling around double digits in any day. That's to be expected. Boeing, what about Boeing there? It's moving sideways overall. It hasn't been very exciting. There's not a lot of good news in terms of momentum, good news that they can build on. There's been little headlines here and there, but no real momentum. So Boeing's got not much to do there. You think CVS now oversold, still closing near the low of the day. You think this is because Walgreens? Well, CVS is in a little different camp there, and also the sell-off, let's just do it. The sell-off in CVS is a lot more waterfall-ish, meaning you would think you'd see a bounce in CVS before you do in Walgreens. They could go hand in hand, that's fine. But as extended as it is, how about this? I don't know if I can do this fast enough. It makes you wonder, what is the stats on that? I'm going to just briefly try. If I can't get to it. Can I get to it? No. I won't be able to do it fast. It's going to take me a little bit to get that up there. But it makes you wonder, right? This being as extended as it is, you don't normally see that. So my assumption would be that you see a bounce in this sooner rather than later, and probably faster than you would on Walgreens. Right? Big difference between a stock that's at 52-week lows 4 days in a row and CVS, which just kind of rolled away a little bit. Hey, on the days where the stock market is moving down, how do you find stocks that are moving up, especially when they're not popular stocks typically being watched? If you have a watch list, the easiest thing to do is, let's say you have a watch list of S&P 500. And you go, well, the markets are down today. Can I sort the watch list by percent change or whatever on the way up? So let's say the markets were just a little bit higher today and you want to find stocks that were down. You would just sort the list. And I don't know if this will work. So for example, try that. Can you see it on the left side there? So this is the S&P 500. Just take percent change and you say, oh, the markets are down big today. Sort them by the stocks that are up, and you go, bam, there's my stocks that are up the most. I could scroll through, and normally there wouldn't be as many, and you can do that. That's probably the fastest way to do it. You would have to have a starting list, of course, maybe Nasdaq or something that you've pre-built. But that'd be the fastest way. No need to use a scanner or anything for that, I don't think. Yeah, I got it. Sector rotation underway. What areas could be strong leading up to the election? Well, I think it's more about what you would want to avoid. Where would the volatility be? Volatility would be in healthcare, any of your mega cap stocks, right? Because Joe Biden keeps wanting to, he mentioned today that the first thing he would do on day one is raise the corporate tax rate to 28% or something. So you'd want to be looking at things like that, like, all right, we know kind of what Trump's doing. What if Biden wins? What has he said? What would he do? And how would that affect different sectors? Healthcare is going to be an issue. That'd probably be the primary one that I would say to avoid. Finding things, you might assume if you think Biden's going to win, markets don't like change. So you might say more defensive names. You might look at like utilities, things like that, that are more defensive. Maybe. We'll see what happens. Yeah. Is GIVO being manipulated? I love this thing where people think it can be manipulated. Well, whatever the spike was from the other day, obviously some significant short covering from the retail traders there, and then just fading away from there. That's typical with these little cheap stocks like that. Very typical. I don't know if it's being manipulated or anything. What do you expect from the Fed meeting next week? More easy money. Looks like the market won't move until that. You expect them to status quo. You expect them to just keep the same comments. We're concerned about the future. Things may be looking a little bit better, but we're concerned, and this darn inflation we can't get under control. We will do whatever it takes to keep stability in the economy. You don't expect them to change any words, in my opinion there. So if they do, you got a recipe for some action. But I don't think they do. They would have signaled it already, and they just haven't done anything. So I will... Did I do everything today? Put so much work into this. I want to make sure I get everything. Yeah, I covered everything. I nailed it. I appreciate you guys hanging out with me here today for a Friday. Hope you have a great weekend. We got an interesting notes from Jazz coming out this weekend. Our customers get that, and then the research members get it as well. We got kind of an interesting breakdown. Did you notice something interesting that happened in the stock market this week that doesn't happen very often? There are only 9 other times that something happened in the market. And we're going to elaborate on that to kind of go over what's going on. Anyways, the rest of you have a great weekend. We'll see you again next week, and I appreciate you watching. Subscribe, the thing with the thumbs up, something like that. Thanks.